These scenes are something which all of us remember, and we of course love these scenes, right? The 2011 World Cup win. However, in this video, I'm not going to talk about the 2011 World Cup win for the Indian cricket team. I'm talking about the sponsor of the Indian cricket team, Sahara. They were the proud sponsors of the Indian cricket team from 2002 until 2013. Then what happened later? In 2013, the flashy owner of Sahara Group, Subrata Roy, was put behind the bars. He was sent to Tihar jail on the account of corruption, money laundering, and a lot of other corporate irregularities that were found within Sahara Parivar. Crores of investor money was lost, right? There were some absolutely innocent investors as well, believed in his mission and poured in a lot of money. And if you ask me, I would have loved somebody like Hindenburg to basically blow the whistle and highlight what were potential issues with Sahara Parivar at that point in time. However, I'm glad at least we get a chance to read the Hindenburg research results right now. In this video, we are going to talk about what Hindenburg is revealing about the Icahn Enterprises, the company founded and owned by Carl Icahn, the activist investor and the corporate raider of the US economy.
Firm now shorting Icahn Enterprises, alleging it has inflated asset valuations. You can see shares there closed down nearly 20%.
We do have a bombshell today from short seller Hindenburg Research, which is revealing a new short position against Carl Icahn's IEP.
Well, before we understand about Carl Icahn, before we understand about IEP, quick request, please go ahead, click on that like button and also subscribe to the channel. Gives me a lot of motivation to continue doing these videos. And thank you so much for all your support. So let's get started with who is Carl Icahn. Carl Icahn is an activist investor. And what does it mean? It means that they go ahead, they identify the companies which are not performing very well. They try to take the ownership of these companies, then turn around the performance by operational efficiencies, by getting themselves involved in these companies, and then selling at a profit a couple of years down the lane. And he started this entire trend in 1987 with Transworld Airlines. In 1987, Transworld Airlines was a struggling airlines company within the US. He bought the company and then he fired the CEO. He made sure the management and the board is somebody who trusted and somebody appointed by him. He quickly gathered the regional airlines all under one umbrella and started to own some of the most important airline routes in the US. By 1991, Transworld Airlines was on the path to profitability. He realized that he's sitting on a gold mine called as the ownership of different routes. He started selling them to competitors and sold off majority of the assets and left the company a few years down the lane with a lot more profits than his investments. Of course, after selling all the assets, after selling all the routes to the competitors, there was nothing left for Transworld Airlines. So that company itself went into bankruptcy and was acquired by American Airlines by 2001. So you can see corporate raiders are none but who actually prioritize their own profitability, and the companies quickly go down the drain once they leave the place. This is what Carl Icahn is known about, and the company that he runs, they are not selling a product like Apple iPhone or any other product. They are a holding company and their activities, Icahn Enterprise activities, are divided into two groups. The first group is to identify stocks and invest in those stocks. Well, it could be Apple, it could be Facebook, it could be Meta, it could be ExxonMobil, it could be any stock in the world where they believe they invest. That's financial activities. On the other end of the spectrum, the same company IEP is also into other sector of activities called as operational activities. Over here, they identify companies, whether it is public company or a private company, which is not performing very well, a distressed asset, so to say. They go ahead, typically they fire the CEO and then they start making operational improvements in that company, try to bring that into the path of profitability and then sell it off. These are the two main pillars on which Icahn Enterprises is run. And Carl Icahn and his son own 85% of this entire company. So you can see how his net wealth is also linked deeply with this company. And this IEP is what you can buy in the stock market, US stock exchanges. Now the point is, why would somebody buy this kind of a stock? Simple reason. If you believe in Carl Icahn, if you believe that, hey, what he is doing to companies, whether it is ethically right or wrong, keeping aside, he is generating a lot of profits for himself and also his shareholders. So of course, individuals want to emulate, replicate his investing style. That's one of the biggest draws why people invest in IEP kind of stocks. If you take Parallels, which is another stock very similar to IEP, of course it is the Warren Buffett-led Berkshire Hathaway. Warren Buffett-led Berkshire Hathaway does not produce any products, but they invest in different companies and they take ownership in different companies. Exactly the same thing. And you can see there is one more carrot in front of all the investors, specifically with respect to IEP, Carl Icahn Enterprises, right? That is, they give up to 15% dividend every single year. Well, in the US, typically the savings accounts give 2 to 3% returns. And if a stock is giving you 15% return, and that too, a dividend, or the base level of the stock price is anyways increasing, that's like a golden treasure. You don't want to miss that. So very similar schemes, right? Then the parallels can be drawn to Sahara. Now what's wrong with this golden scheme? The primary issue with IEP Enterprises is from 2014 till date, the net cash flows are negative. They are not generating any cash flows positive. There is no cash coming into the company. Companies are only losing the cash. $4.5 billion of negative cash flows, money leaving the company. Then how could they come up and give these dividends? $1.5 billion worth of dividends are given to shareholders. Well, that is crazy because typically dividends are given from the profits generated in the company. The only way is these guys sell their stocks. The stocks are sold as ATM share sale, that is at the market share sale. If the stock price is currently $30, then they release 10 more stocks into the market at exactly the same price. So folks who are looking forward to buy these stocks, they go ahead and buy at the same price. Well, these guys themselves basically own 85 to 87% of the overall stock, so they make sure that the dilution is not recognized very well in the market, because majority of the other investors own less than 0.5% or 0.01% of the stock. This is called as the old investors are getting dividends because new people are buying the stock and that money is rerouted into the dividends. That's it. There are no profits coming into the company. So how are they able to give dividends? The new folks who are buying the stocks are giving money so that old folks can take this money as dividend. And this is called as a Ponzi scheme. And this is exactly what was happening in Sahara Parivar as well. A flashy owner who was giving a dream to all the investors that bring in new investors, bring in new home investors, and as you bring in more people, you will also get a dividend. You will also get more and more returns, some commissions. This is the Ponzi scheme that happened in Sahara Parivar, and also the same thing is highlighted by Hindenburg as Ponzi scheme in the Hindenburg Research Report. Now the question is, what is the overall net asset value of these companies? Well, we understand that there is a market that is trading at $30, $40, and the underlying value of all the operational activities and the financial activities that Icahn Enterprises is taking is $5.6 billion. So people are interested that, hey, we are getting dividend, this guy is a great guy, he does all the right investments, so my money would also grow. This is the theory. But let's look at what happens within this $5.6 billion. What are some of the investments that they are making? If we go look at their annual statement, there is one particular line item where they mention that they own a meat packaging company and the value of that company is $243 million. And this is a publicly traded company. If you go and search for this particular stock on Yahoo Finance, you will realize that the market cap of this company is around $100 million. So how could they increase and put the value as $243 million in their annual report? That is exactly the question asked by Hindenburg as well. And some of the industry experts, prominent leaders, thought leaders, and a professor from Tuck Business School has mentioned that technically it is possible, but the market situations does not seem to indicate why they should be doing it. There are no extraordinary situations under which these guys are operating. So there is no reason why they should be increasing the value by 200% and 300%. So there is technically nothing wrong. There is no fraud these guys are committing, but the investors are definitely getting fooled through this activity, and that is something everybody can verify. This information is available on Yahoo Finance. This information is also available on IEP's annual shareholder letter. However, there are a lot of other companies that these guys own, IEP, and these companies are privately listed companies. So you do not even know what is the true market value. And that exactly is the question once again asked by Hindenburg. If a verifiable information is basically multiplied by 2x and represented in the annual statement, then what happens and who cares about information that is not verifiable? To even substantiate their claim, Hindenburg highlighted that there is only one investment banking company, that is Joffrey, which highlights the performance, whether it's a good stock to buy, bad stock to buy, and gives recommendations around IEP. Until 2020, UBS was another company which was covering IEP. But in 2020, they stopped covering IEP because they mentioned that we are not able to give good recommendations around IEP as there is lack of transparency with respect to the data that we can collect. That is insane. A big bank, a company which has $5.6 billion as their net asset value, is not giving the right information. That is the level of irregularities that are present in the IEP stock area. Now, you might ask, why is this happening? First of all, why are they marking up the company values? Number two, why are individual investors running behind these kind of companies? And the simple answer is the emotion that none of us can escape: greed. Thank you so much, guys. I'll see you again in the next video. Bye bye.